This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending January 16th, 2021. Our question this week is, what is the difference between investing and trading? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.57% on Friday and was down minus 0.91% for the week. The S&P 500 decreased minus 0.72% on Friday and was down minus 1.48% for the week. The Nasdaq decreased minus 0.87% on Friday and was down minus 1.54% for the week. Looking at the week, we can see that there were 5 up finishes versus 10 down finishes for the indexes. On Monday, Thursday, and Friday, all the major indexes were down. On Tuesday, they were all up. And on Wednesday, the Dow Jones Industrial Average was down, while the S&P 500 and the Nasdaq finished up. The new unemployment claims were 965,000 versus 800,000 expected. Continuing unemployment claims were 5.3 million. Vice President Pence refused to invoke the 25th Amendment to remove President Trump, and then Congress voted to impeach the president. U.S. retail sales fell 0.7%. The 10-year Treasury yield climbed to its highest level in 10 months. And the Fed Chairman Jerome Powell stated that interest rates will not be raised anytime soon. New unemployment claims, continuing unemployment claims, calls to remove the president, the impeachment of the president, U.S. retail sales, 10-year Treasury yield, and Federal Reserve Chairman announcements are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions like J.P. Morgan Chase Bank, big corporations, the President, and the Congress. These 5 entities will do what they must to drive the market higher. However, sometimes they debate among each other. Notice that this week the market struggled, which can be attributed to the fact that the president was impeached. The market reacts negatively when the powers that be are at war with each other. Now we are ready for our question of the week. What is the difference between investing and trading? Well, the big difference is the time horizon. The basic difference between investing and trading is the time horizon. Investors buy a stock and hold it for a long period of time. A trader buys a stock and holds it for a short period of time. But what is long and what is short? Well, the IRS defines long as 1 year or more and short as less than a year. The South Side advocates learning to invest before ever attempting to trade. That's why we say RSI, that is read, save, invest. There is a lot of money that can be made in the stock market, but there is a lot of money that can be lost in the stock market as well. Whether you invest or trade, you can lose or gain money fast or slow. Traders tend to win or lose quickly, and investors tend to win or lose slowly over time. What are you? Are you an investor or are you a trader? Or do you own any stocks at all? If not, why not? Are you afraid that the market may fall again? The market, after all, did fall this week, and it will fall again at some point in the future. But the market has already touched all-time highs this year. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I trade what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is my trading watch list for the week ending January 16th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Kronos Group Incorporated, ticker symbol CRON. It's in the first column. It increased 20.64% for the week, though it was down minus 2.93% on Friday. It has been the top performer on the list in the past as well. Kronos Group Incorporated is a marijuana company. They manufacture, market, and distribute hemp-derived supplements and cosmetic products. Kronos also cultivates, manufactures, and markets cannabis and cannabis-derived products for medical and recreational use. Looking at a summary of results, you can see that Kronos has increased more than 57% already in 2021. I traded Kronos this week. I generated cash flow from it this week and in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is outperforming the S&P 500 index ETF SPY so far in 2021. The Southside portfolio is up 8.92% versus 0.49% for SPY, a difference of 8.43%. The Southside is beating SPY by 8.43%. This week, equities, including puts, calls, and ETFs, make up 70.38% of the portfolio. Cash is 29.62%. The cash flow generated for this week was 1.52% of the portfolio account value. The account value changed by minus 1.88%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.46%. I sold option contracts on 6 positions this week. 6 puts. They were all puts this week. That ranged from $223.36 to $696.68. I also received a cash dividend of $114. You can get more details, including the total dollar amount of cash flow for the week on the website southsideschoolofinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Financial Freedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.